them first, okay? Um, so I'm going to start off here. We got a small number of people, so thank you for those who are here attending with us tonight. We have a super session set up. Um, so I can go through this part around not-for-profit, and you guys are aware of that. But I mean, one of the things that should always say is that if you look at this group, the greatest asset is networking. So our agenda tonight looks something like this. We're going to go through, and I just did those steps right there. So we're only behind by about 5 minutes. Um, one of the things I want to go through and talk about is the upcoming events. So I'm going to go to the disclaimer, and I'll come back to this slide and then go to the one for Chris. So this is our general disclaimer. I'm not going to read through this. I'm safe because Steve Peterson is not in the house, even though I know Chris Sardone is going to rat me out to him. But just, just basically, when you get ready to make a decision associated with real estate investing or really any other investment opportunity that you have, the person who makes the decision is you. It's not someone else, it's you. You have to decide what's the right thing to do. You'll hear us talk about a number of things tonight. Talk about how you can do real estate in a particular way. And I always caution people by saying the things that are presented are normally and almost always items that someone else has done and they've been fairly successful at doing it. That said, it doesn't mean that it's something that you're going to be successful at doing, particularly if you tweeted a little bit here or you don't understand some fundamental portion of it. So we'll go over a number of things, and those things we can't vet and say whether it's good or bad for a particular individual. And we certainly do not vet individuals also. So um, the decision maker is you. So I'm going to go back now to this slide. At the last meeting, we talked about the fact that we were going to go to a format where we had summit type of events, but taking place in more of a workshop oriented series. And this was input that came from the group of folks who were a part of the summit committee, and they looked at a number of different things that we could do. And so we're starting that series in November. And so there's a person that Joe and I met. Tom Z is what people normally just call him. You can see his name written out there. But he's going to be coming in and he's going to be teaching us a process and a program that he has. It's called the Rapid Cash Generator. I'm not going to go into a whole bunch of details about it because that's going to be up on the website and you'll be able to see it there. So Tom is an active investor. He's the president of Traction Real Estate Investors Association. So he's very well known. He's been written up on CNBC, Kepner's, I mean, a number of different places he's been able to basically be a speaker and show folks what his capabilities are. So I think that once you see what he's going to be presenting in more detail, you'll find out that it's something that probably you'll want to take a closer look at. And so what we're going to do is we're going to have a one-day workshop, and that date of November 12th is actually the second Thursday. So that'll be this normal time, this second Thursday in November, which is our normal general meeting time. So that's what that first session will be. And then there's going to be a one-day workshop, and that one-day workshop is going to be on Saturday, right after the general meeting. So that's the way that we worked out those things from a scheduling standpoint, and we expect to probably do something similar to that in December. But no complete commitments. We do have a number of folks that you probably, most of you have never heard of, who want to actually speak at our Zoom sessions. So one of the good things about Zoom, given our previous discussion that we were just having, there are a lot of people that we probably could not afford to get, nor would they want to come to Rochester in January or February, any of those time periods, who are more than willing to put on workshops and be a part of the things that we think would bring value to you as folks who are looking at real estate investing and what it is that you can do to be more successful. So that's sort of the layout of things that we, as we're going forward. As far as the December holiday party, basically it's still a question as to whether or not we would have it. Certainly different format. I don't think they're going to be folks that are going to be up in the floor dancing cheek to cheek, um, unless it's your significant other, but more than likely it won't be the same sort of things that we had before, where we would have 4 or 5 lines of people doing line dancing, where they almost elbows to elbow. That probably does not work in our environment if you want to be safe. So a long way of going through and saying it's something that we really need to do some more research around. One of the things that we are aware of at this point is that if we have the holiday party, it's going to probably be limited to about 50 people. And that's because of the fact that that's what New York State is basically saying. All the restaurants and would they have to abide by that given amount of space that we have. And so we're still looking through it. We'll keep you posted as we look closer into what the possibilities are and make a decision as to the path forward. Any questions? I mean, with small group of folks, any questions on that part? Any things that we may not be able to clarify, but at least we can try to address your question if you have any. Okay, so talk a little bit about the folks. The folks know Chris Sardone, CPA. I'm going to leave this slide up until he gets ready to do his presentation, and probably it'll be up for a large portion of it. People want to take down his name and number. Sorry, you know his name. Take down his address and phone number. But Chris, as most of you probably know, is a Freedom First vendor member. He's his company is the company that we use to do all of the filing of any type of taxes or accounting oriented items. And so we've known Chris for a long while from that perspective. And as the next bullet indicates, a lot of people who are on this call actually use Chris as their CPA. And a whole bunch of them that's not on here, of course, use Chris as their CPA that are members of Freedom First, given the size of our audience tonight. And Chris is a professor at Monroe Community College, where he teaches accounting and finance. And I went and took a close look, and some classes on tax preparation and a whole bunch of other accounting and finance things that he taught last semester. So if you need to brush up on those things, I think that probably MCC has most of their classes. Are they all virtual now, Chris?
Oh, absolutely. They
Yeah,
sure are.
so we could always go in and take a virtual class, get up to date a little bit better than we are right now. Then the other thing I just pointed out, and I always tell people this, Chris is my personal CPA, and he's been my personal CPA for about 30 years. I want people to get the wrong idea and say, well, he started off with Chris and he kept Chris. I think altogether I probably had, 4 or 5 CPAs. Those other 4 guys got fired. So, no. And so Chris goes way back. And I if someone says they're thinking about a CPA, I always tell them, don't think, here's the guy. And I know a couple of people do that. Joe Lavabera, for example, and I can go to others, but the people are probably saying, okay, let's get on with the presentation, Leon. So what I'm going to do is, without further ado, have my friend Chris Sardone take over and uh, do his soft shoe. Let's put it that way. Chris?
Okay. So Leon, can can this be taken down so I can actually see people? Or you want to
Sure.
leave it up?
No, I can take it down. It's not a problem.
Because I feel like I'm talking to myself.
Yeah.
Which as a teacher you often do. But
Well, that's just because in that particular setting, people will be ignoring you. We wouldn't do
perfect. I like this better. Okay, everybody. I know most of you, but not everybody. And I thank you. Today isn't what I expected it to be in May. I thought I would be talking about a major tax bill passing, which is very often done before an election, but that's not the case here. We got the virus. It resulted in a number of acts being signed starting as far back as March. And we've sort of been in that world. And now we're into a presidential, I guess I want to call it a battle more than an election. It's taken some strange fronts. But what I want to do tonight is I have the main topic I want to speak about are the 2020 tax policies of the 2 major presidential candidates. Now, where am I getting that information from? I'm getting it off the platforms, not off the debate rhetoric. So I'm actually going to what they have in writing in kind of limiting my discussion to that because the debates is kind of craziness. And I also have a couple little topics I want to talk about before that to briefly go over. And if you want more information on these little topics, then you just email me. And Leon always makes that available, and I can tell you, and I can help you out with that. The first one that doesn't pertain to everybody, but it does pertain to enough people, so it's worth mentioning, is that improvements made to the interior of a commercial real estate. Now, what's commercial real estate? Everything that's not residential. So residential, as you know, is depreciated over 27 and a half years. Commercial is depreciated over 39 years. And that would include storage units, office, warehouse space, manufacturing space, and a lot of mixed use space would be limited to a 39-year write-off. So if you own commercial space, whether you occupy it or you intend to lease it out, what you need to know now is that any improvements you make to the interior of commercial real property, and those improvements that are put in after the date of purchase, and they do not expand the building. So you can't, improvements that expand the building don't count. But improvements made to commercial property, instead of having a 39-year write-off, has a 15-year write-off. And that was in the first CARES Act that was signed back in March. So that's a 15-year write-off. So you say, okay, so that's better than twice as fast. It's better than that, because if it's a 15-year write-off, you have the option to take it all in 1 year. So for the first time, improvements that would be depreciated over 37 and a half years can be taken in 1 year. The catch is not residential, everything else, but not residential, and it can't expand the square footage. That's the most simplified rule on that. But that is a great benefit, and we have a lot of clients taking advantage of that. As you know, building supplies are hard to get. And this is one of the many reasons why building supplies are hard to get is I know that in my building, we're expanding, we're adding some offices, we're, trying to look at the new world. We want to spread people out. So we're getting rid of any bullpen areas we had. We're putting people into offices. We're changing because I'm not sure I don't know what the new normal is going to be. And I'm figuring, you know what? I'm having a decent year. Not everybody is, but accountants are. And I can write it all off in 1 year. So we're actually making improvements this year because of that law. But just remember that residential doesn't apply. Okay. If you want any more information on that, certainly email me. Now, next, the president on August 8th signed an executive order deferring payroll taxes beginning September 1st for employers who elect to do that. So those of you who have W-2 jobs or you employ people, this has been very confusing, and trust me, it's extremely confusing. Let me give you a little history. Since March, the president has wanted to eliminate on employees who make under $100,000 a year their need to pay into Social Security and Medicare. So he wants to just put that on hold. What does that do? That gives the employer roughly a 7.5% increase in pay by not charging them those taxes. Was never real clear about whether they wanted to relieve the employer's match on that or not. And that's been kicked around. The Republicans like it. The Democrats hate the idea because it really only benefits people who are employed. So it didn't get much traction. Well, one thing you can say about Trump, he doesn't give up. And he didn't give up. And he kept pushing it, and he kept pushing it, and he kept pushing it. Finally, on August 8th, he said, I'm going to do an executive order. And starting September 1st, employers at their election and the employee's election can defer Social Security and Medicare withholding. So we got what we call basically a presidential order deferring payroll taxes. Now, have you heard of this? It's kind of a confusing thing, but if an employer opts to do it and the employee opts to do it, so they have to be in agreement, they can stop withholding Social Security and Medicare on the employee. But here's the problem with it. It's only a deferral. What Trump is saying is, if I get elected and I maintain control in the House, then I'm going to move to forgive those taxes. They'll never be due. And if I get control of the House, I want to take a step further. I want to eliminate Social Security and Medicare tax and make it part of the federal tax so that there wouldn't be a separate tax. It would be part of it would be like everything else, just paid for by the government. And employers and employees would no longer be burdened by Social Security and Medicare withholding. Now, that's an interesting concept. It's in some ways very much the Democratic Party platform with a twist, because the Democratic platform is they want to charge Social Security and Medicare on all income. Why just wages? Well, if it's on all income, then isn't it really coming out of the federal budget, which is what Trump is saying. Let's just get rid of the tax and just have it paid for by our income tax structure. Well, that's not working too well. And basically he's saying, well, elect me, and then I'm going to move to forgive this deferral. And I'm going to try to move, if I get control of the House, of eliminating the tax altogether. So what happened then is this passed, and it was kicked out of the HEALS Act, and it was put into this executive order, which he has signed many of. Here's the problem, and it is a big problem. It there's no guarantee that it's going to be eliminated in January. If it's not eliminated, that means if Trump is not elected president, if Trump doesn't keep the Senate, if Trump isn't successful in his legislation, then starting in January, the employee and employer would have to pay the money back. Well, there's problems with this and no one's figured out yet. What happens when the employee quits the job and they're no longer there? Who's going to pay that back? The employer? Or are they going to be tracking the employee down, finding out where they are and beating them with a whip to get the money back? I mean, I don't really know what they try to do. And the government has been unable to answer this question. The way it works now, starting in January, they would pay it back. So now what means is you would get a 7.5% reduction every week in your pay now, but starting in January, you'd have a 7.5% less income because you would be paying that back over a quarter. So consequently, we've told our clients, our employers, don't buy into this. It's just simply insane to do it. Plus the fact we're concerned that employers could be stuck having to be obligated to pay the employees money back for employees that are no longer employed. Now, the president's office says, no, we would never do that. Well, yeah, that's if he's in office. If he's not in office, then it would be up to the next president, and it would create a lot of uncertainty on it, because one thing for sure, if they don't change the law, the IRS is going to look for full recovery on these deferred taxes, one way or another. And employers are always an easy target because they don't disappear the same way that employees might disappear. So I wanted to mention that to you, but I'm not sure if anybody really wants to go there. Has anybody heard of that? Has anyone worked anywhere? You have, Joe, and I see Diane. Do you know anybody who's implemented it? I mean,
Hey, Chris, we had one employee that demanded that we do it. So we did.
Really?
I don't know if she's going to be able to pay it back, but yeah.
That's very interesting. So you're doing it for one employee.
One.
They just came in, they said, I want it.
Yeah.
No names or anything, but is that an employee you suspect it's going to be around or someone who's going to disappear?
I suspect she'll be around. She's been with the company for like 25 years.
So she's hoping, my guess is that she's hoping that Trump gets elected, and he keeps control, and he's going to repeal this. And if it happens, then she was the smartest person at the company. I just don't believe it. I don't think he's going to get control of the House. I do think whoever wins the presidency will probably have control of the Senate. That's kind of the general rule in recent elections, but I don't see the House flipping. Who knows? You know what? No, nobody knows. But I just don't see it, and I don't see the Democrats in the House giving Trump this gift. But it'll be interesting to see. So you actually are implementing it.
Yeah.
So you did that with the payroll service. You told them, and they have it all set up.
Right.
Just David's talking about a fairly large employer that has I don't know, 80 employees or something.
Just under 50, like 51,
51
49.
employees.
Yeah.
So it'll be interesting to see. But when employers have called us, we've said, don't even suggest it, don't even recommend it, because I can't protect you from that liability because there's no clarity on it, you know?
Yeah, we didn't say anything to any of the employees when it came through the payroll service, but one employee, she came in and demanded that we did it. But we tried fighting it, but
It'll
we'll
be
see what
interesting
happens.
to see. All right, so now I want to talk about the major candidates, about their tax policies, what they're doing. If you listen to like yesterday's debate or the debate a week ago, there is confusion over Joe Biden's policies. At times he said, I'm only going to increase the tax on people over 400,000. At other times in the same discussion, in the same debate last week, and also in the same debate yesterday with Harris, there's a severe contradiction. Both Harris and Biden at one point, Joe said that they would repeal Trump's tax cut immediately on taking office. Then within the same debate, they said, we're only going to increase taxes on people making over 400,000. So that's obviously very contradictory. So what I'm going on is a tax briefing from our tax service, which is based, what they claim, it's based solely on the printed platforms of each major party. So it doesn't involve the debate rhetoric or, or speeches or anything like that. So let's just let's just take a look at it a little bit. So when we talk about individual taxation, it's been very clear that, and I don't mean any disrespect, but I'm not going to say President Trump. I'm not going to say Vice President Joe Biden. I'm just going to say Trump and Biden, okay? I don't mean that as any disrespect. I just want it to be easier. It's been very clear that Biden has said over and over again that he wants the upper tier of the tax bracket back up to 39.6%, which is where it was under the previous president, Obama. And he wants that to go back there. He also doesn't like the capital gain rates, which are currently at 0, 15, and 20%. He actually wants to phase those out. He wants the minimum rate to be 20%, and then he wants to phase out capital gain rates for people making somewhere around $400,000. The exact level really hasn't been determined. I've heard 441,000, but somewhere in the mid 400s, he wants to say you don't have any right to capital gains. So you have a capital gain, it's ordinary income. If you're below that, he wants to have a 20% rate. Right now, it's a 0, 15, and 20% rate, depending upon your income. The highest rate's 20, the lowest is 0. So if you're in I think it's a 15% tax rate or lower, your capital gain rate would be 0. If you're in between, which a lot of my clients are, it would be at 15%. If you're at upper income levels, it would be 20. And Biden wants to get rid of that. Now, Trump has no current tax plan. His tax plan is basically, I passed it. It's the law of the United States. I intend to keep it in place. He doesn't really have a proposal to change it, except for what I said earlier. He really would like to get rid of Social Security and get rid of Medicare as a separate tax and make it part of the general budget. I'm not sure how he does that without increasing rates. I think if he was here, he would tell you because he's going to create a lot more jobs. So there'll be more, but I'm not really sure because that's a pretty big tax. In fact, I would say that my clients who make under $50,000 a year, on their tax return pay more in Social Security, in Medicare than they do in income tax. So just to give you an idea, if they were to eliminate that, the amount of income that they somehow would have to make up. But he doesn't really have a plan to do that. He's just kind of said, hey, this is what I think would be cool to do, and I'd like to do it. Biden clearly has a plan about increasing the rates to 39.6%. Now, I should say, who does he say would be subject to that tax? Well, this is where even the Democratic platform contradicts itself. Part of the platform says it would come in at 400,000. Another part of the platform says it's $1 million. So they don't really know where that is, but they are talking about a 39.6% tax rate. Now, what else do we have? Well, child tax incentives, I don't think will really be touched. Trump greatly expanded that. Biden says he wants to increase it to $8,000 per child. And if you have 2 children or more, $16,000. Right now it's 2,000. It was 1,000 under Obama, just to give you kind of a review. It was 1,000 under Bush, the younger Bush. What do we call him? Bush Jr. Bush Jr. put it in at 1,000. It used to be 400. And it stayed 1,000 all the way through 8 years of Obama. Trump increased it to 2,000, and it's at 2,000. Biden says, I want to do 8,000. I'm not sure if I believe that. That would then mean that somebody with 2 children would have a $16,000 income tax credit. So that would wipe out income probably at about an $80,000 level for a family with 2 children. $80,000-$90,000 level. They would pay 0 tax. I'm not really sure if we're ever going to see that, but that is what he's proposing. My guess, it's going to stay at 2 no matter who wins. I just don't see it changing. Neither one's going to reduce it, and it's a nice thing. And right now it's 2,000 per child. So if you have 3 children, 4 children, it's a really nice incentive. But who knows? Maybe it will go to 8. It scares me if it goes to 8 because I don't have children. So it makes me wonder what's going to happen to my tax rate. You know, I might have to go get some children or something. I don't know. I'm not sure if I want to go there though. Okay, itemized deductions. So we're in New York State. So what are we? Is that a blue state or a red state? What the hell are we? We're a blue state, right? Democratic state's a blue state. So what happened was, as you all know, they're limiting as an item. This is Trump's bill. Limits is an itemized deduction taxes to $10,000. And that's real estate taxes and that's income tax that you pay to a state. And for people in medium income levels and up, that in New York State, in most blue states, because the blue states are the ones that have the high income tax rates, is really, in a sense, penalizing us. We're not getting the benefit of the whole thrust of the tax cuts. We got a little bit, kind of like tax cuts on sale, but we didn't get all the tax cuts because we are in a high tax state. So what happens? Well, Biden says he's going to eliminate that. And I guess I do believe him, because if he's going to get elected, it's going to be with absolute support of all the blue states. And I do think that tax itemized deduction will come back. Now, will it mean much if we have an increase in tax? Maybe not. Maybe it's like a victory, but it's really not a beneficial victory. I don't know. There right now, there used to be a phase out on itemized deductions for the wealthy who made over 400. Trump got rid of that, and Biden wants to bring that in. I don't know how. I never saw that as being that damaging, quite honestly. But I got to tell you, the limitation to $10,000 affects a lot of my clients, not just wealthy clients. It affects a lot of them. They did get a savings in the taxes with a tax cut, but I said, not the same kind of savings that my Florida residents are getting. So I do think that Biden would probably bring that back in. Payroll taxes, I already kind of told you that Trump really wants to eliminate those. He wants it to be part of the regular budget. And I think Biden just wants to keep that the way it is. There's really no mention in his platform on that. So he probably wants to do what every president has done in our lifetime, is leave it alone and occasionally tweak it a little bit for the consumer price index. Now let's get the corporate rates. C Corps, which a lot of you do have and do operate with, C Corps, the maximum rate is 21%. Now, what does that mean? Well, we used to have rates that escalated. They started at 15 and they went as high as 34%. Those all went away with the Trump tax code and it became 21%. So if you have a corporation that only generates like a $20,000 profit, you actually have a 6% increase because you went from 15 to a flat rate of 21. If you have a C Corp that makes over 50,000, you're benefiting with a 21% rate. If you're under 50,000, you could actually be paying more tax if your net income is under 50. In those cases, in our office, we've convinced those clients to convert to an S Corp. So it would flow on to their personal. Trump has no proposals to change that. He wants to keep it at 21%. He's fine with that. He got what he wanted. He wants to keep it there. Biden wants it to go to 28%. Used to be 34. He wants 28, but he wants a 28% flat rate. So that would mean, again, the old 15% on the first 25 is not coming back. It's 21 now, we go to 28. And everybody would pay a 28% rate. Although that could change, and I would probably, I guess, again, and I said I wasn't going to talk about things that the candidates have talked about in the debates, but it would be hard not to do it here because Biden has kind of consistently verbally said he would stage it up. And only the higher earners would win 28%. It's not actually the platform, but to his defense, he's been pretty consistent verbally that he would step it up. Okay, so I don't know what the starting rate would be. If it would be 21, it would go back to 15%. The 199A deduction that I think probably most of you in this room have benefited one way or another. That's where basically 25% of the qualified business income gets deducted. And for some people, it's been a really nice deduction in rental properties included in that. If you remember last year when I talked, it was kind of unclear, but I told you that I felt that the support was there to include rental property, and the support is there, and that really is the law. So you're getting a 20%. So if your rental property shows a $20,000 profit, you're getting roughly a $4,000 deduction. Not quite that easy, but that's the basic rule. Trump has no talk about changing that or modifying it. Again, he basically got what he wanted and he's fine with it. Biden wants to phase it out. The more money you make, the lower the percentages. And the phase out would completely be gone at 400,000. Again, no detail on how we would phase it out. So if you make 200, do you get 10%? Do you get a 5%? Do you get a 15%? Absolutely no detail in any debate that I can find, in any speech that I could find, and definitely in the platform. There's nothing about how that phase in would step in, except if you made 400,000, it would be zero. It would be somewhere between 20 and zero as your income rises. But no idea what the phase out would work. But be clear, that was a Republican idea. It was shoved down the Democrats' throats, and they don't like it. So that 199A, I would expect to see probably go away or pretty much go away. It would probably take some time. I don't think it's something that would go away in a year. I think they would phase it out and then they would just keep changing that phase. I don't even want to talk about energy tax incentives because I don't know what, I have no idea. They've been all over the place. Trump's pretty clear with his feelings on that. Biden has talked about eliminating fossil fuels at time. He's talked about getting rid of fraction. He wants to get rid of the subsidies that's in the fossil industry and then get subsidies into other alternative sources. I'm not really sure where that's going to end up. And I think that's something that's going to really be debated at the level of the House and the Senate, not at the level of the presidency. I don't know if any of you caught this, but ExxonMobil came out and said that they're going to increase carbon emissions. Did you hear that? It was kind of weird. They go, we're going to increase carbon emissions because right now we feel we can do it and it will increase our profit in a struggling time. So we're going to do it. Did anybody hear that? They just quietly said that last week. We're going to increase our carbon footprint because it allows us to produce gasoline at a cheaper cost, and we're not making money right now, so we want to produce gas at a cheaper cost. I was surprised that we didn't have politicians all over it, but I guess they've been busy enough. So I don't know where that is, but Biden does have, as Obama had, he wants to bring in a lot of tax credits for alternate fuels. But other than that, there's nothing specific about that. International tax, Trump has absolutely no proposals, nor has he talked about it. Biden is proposing doubling the income tax rates earned on foreign subsidiaries of U.S. firms from 10.5% to 21%. That's like an excise tax. I guess it's that way. That's his way of bringing jobs back by increasing that. So it would cause imported goods to go up. So it would encourage people to manufacture it in the United States. And of course, Trump's plan has just been really to negotiate with employers to bring jobs back. Oh, let's see, what else do I have to talk about with this? It's kind of been fun trying to follow what these candidates have been talking about. But what's interesting is normally in a presidential election, each candidate has a very clear tax proposal. We don't really have that this time. It's really Biden who's talking about what he wants to do if he's electing. And Trump is basically saying, I like the way it is, so I don't really have anything new. But I did give a handout to Leon. Are you able to get that up, Leon? You're muted. Can we unmute Leon for a minute?
Yeah, I'm unmuted.
Leon,
Yeah,
do you have that? Were you able to get that handout up on the tax rates?
absolutely.
If you could
Let me,
get that up, I have something interesting. Now, this was done by supposedly a nonpartisan group. I don't know if it really is or isn't. That's another whole thing. That could be a seminar all by itself. What's a nonpartisan group? But I want to show this to you. This shows, and this has been reprinted. This was in USA Today, although this did not exactly come from USA Today because this one was easier to print, but it's been in most major newspapers. This is under if Biden wins versus current law, which would be if Trump wins, what the effective tax rates would be in 21 and what the effective tax rates would be in 26. Can you move it up just a bit? Yeah. Keep good, right there. That's good. Okay. So on the left is 21, and you see the X's I made there? Okay. So take a look at the two X's on the left. Those would be the rates based on where you are in the quintile, which is what? That's a quin is a 20%, right? So if you're in the bottom 20% of the tax bracket, current law would have a 1.1% rate. Biden's plan would be 1.6. If you're in the fourth quintile, so that would be roughly that would be the 60 to 80% of your income based on your level of income. So the 60 to 80% of the wealthiest people, which would start at 74,000, you would be looking at a tax increase from 19.4% to 19.8%. And then you could see if you're in that very, very, very wealthy, all the way at the bottom at 3.2 million, you'd be looking at 30.6 going to 43. Now, the pre-TCJA level, that would have been before Trump's cuts. So that would have been the Obama years. Okay, so the pre-CJA would be the Bush-Obama years. And I say Bush-Obama because Obama tweaked Bush's bill a little bit, but didn't completely change it. So they're sort of indirectly co-authors on this, on the pre-TCJA rates. So you can see we were looking at a 34.6 under current law. That really high group would be roughly at 30.6. With everything counted in the Biden plan would bring it to 43. So that would kind of give you an idea. But that's 21. Look at 26. So so this would be, I think that's 26. Yeah, 26. So this would basically be at the end of the next presidential term. Where will we be as phase outs come in and things like that? So you can see that Trump's rates would be at 2.2, they're looking at, compared to 2.8 under the Biden. And then you can look down and see. So I'm not sure exactly what went into making this, but they're supposed to be taking into account income tax rate, the payroll taxes you pay as an employer, your Social Security, and somehow they're supposed to be factoring this all in. I can't really vouch for how these numbers came about, but it was in the New York Times, it was in USA Today, it was in the Washington Post, and it's been printed in a lot of tax literature, this same table. So I got to believe some great minds produced this, but I just think it's kind of interesting. It's basically what's being said is Biden's going to increase the tax on the very, very wealthy. Not so much on lesser incomes, but to say no increase isn't quite right. There would be some of an increase. Of course, who pays corporate income tax for a minute? Who really pays corporate income tax? Well, if corporate income taxes are paid by corporations, then that's a cost of the corporation. So wouldn't they be passing that on in goods and services? So the theory being that if you increase corporate tax rates, you're increasing the cost of goods. So it's causing inflation because you're going to pay more when you buy manufactured items because they have a higher tax burden attached to them. I mean, is it direct? I don't know. But, it makes sense. I mean, just like you saw fast food restaurants, their prices going up because they had to pay their help more. Well, certainly if large companies have to pay higher tax, then they're going to have to pass it on in the goods and services. I'm not sure how directly it is, but it would make sense. This doesn't factor that in. So whether you believe an increase in corporate tax rates will cause inflation or not, that's something to keep in mind too when you're looking at the proposals. So this is what I have on the tax proposals. You can take that down now. And that'll be in the email I send to you. So when I send the email to Leon, that'll be there. Now, what I'm also going to send to you, what will be in the publication I give to Leon, we'll talk about some of their spending plans, which I think kind of goes a little bit beyond what we're talking about. But, you know, they both want to spend money on infrastructure, how they're going to do it, where they're going to spend it on, what they're going to spend it on. That'll be included in the document I send out to you for your reading. I never really take those things too serious because who's ever not in office, I don't care which party it is, they always say they're going to spend money on infrastructure. When they come into office and I go to work, I still drive my tires through potholes. So I'm not sure if we're ever going to see anything change. But they always say that, you know, and then they talk about how they're going to spend it. You know, Biden wants to spend it on high-speed rail. Well, you know, Louise Slaughter, you know, bless her soul. I remember when she first got elected, her platform was a high-speed rail from New York City to Buffalo. And she was first elected a long time ago. Some of you in this room maybe weren't even born when she was first elected. Did we ever get the high-speed rail? We got 10 miles going through Bergen. I don't know if you're aware of that. They rebuilt the track going through Bergen as a high-speed rail. We got like 8 to 10 miles. That's all we ever got in her entire career. So, of course, Biden's got high-speed rail there, although they did get a high-speed rail to Washington, didn't they? New York to Washington. Does it work? Does anyone know? I don't know. We spent money on it. I don't know if it works. It would be kind of cool if we did have high-speed rail because we could become home for people working in New York City. But maybe we don't want that because maybe that would bring the virus to us. But I don't know. But so you can read this thing and they talk about how they want to spend the money. You know, people go to school for free, all kinds of things like that. But I think that's the typical stuff we've seen from whichever party's not in office. So I'm not sure if we would see any of that, but it'll be in here so you can read about it so that you can at least see the proposals without actually seeing them debating it, which is an ugly thing to watch. So that's it. That's what I have for today. There's not a lot because they don't seem to be too focused, these two candidates. But it is interesting, and we got what, 25 days to the election? It's going to be a pretty exciting 25 days. Questions? I see it, like everybody's muted.
Hey, Chris, it's David again. The 400,000 income, that's individual or joint?
Now that's a fascinating question. I think it's joint.
Shit.
Everything I
Okay.
read says it's joint income. So single would be lower.
Okay.
Okay. But there isn't really good clarity on this. This is a unique presidential election, to say the least. But I think that's joint. Generally, when politicians talk about tax proposals, they're talking about married joint. And then after it becomes law, they then adjust it for singles. So there would be no reason for me to believe that it's anything but joint. Yeah, I mean, 400,000 joint. I mean, that's good income, but you're not rich. I mean, you're not living in the Hamptons at 400,000. It's well-to-do. I mean, it's not poor, but it's certainly not what I would call rich. It's a nice income, though. What else? Any other questions? Leanne, you'll get my when I send this to you, you'll forward it to everybody along with my email, right?
Well, I probably won't do it, but I have a more than capable person who always helps me out with this sort of stuff. And she's smiling right now. That'd be Susan.
Okay.
So a long way of saying absolutely, we'll take care of it.
All right, I'll email it to you, then you'll take care of forwarding it and whatever. And I'll answer questions. And if I can't answer it, I'll have somebody else from my office answer it. If it's a nonprofit, I usually don't try to answer nonprofit questions. I have Andrew in my office, who's our CPA responsible for nonprofits, and he would answer that question. Because it doesn't have to be a question just relating to real estate. The only really specific real estate change is that 15-year write-off on commercial improvements that also allow us to take it in 1 year. Other than that, it's really been a rather inactive year for changes in real estate law, because you guys are getting hit with, I mean, you know, the Section 199 is great, the 20%, but you guys are getting hit with, you can't do evictions. I don't know where that stands right now. I have a tenant, I have a commercial tenant that's not paying. And even though the state law doesn't protect commercial tenants, the Monroe County eviction courts have closed. So if you have a commercial tenant you want to evict, you can't, because the state has closed the eviction courts. So even though the bill is only residential, it actually affects all commercial. And I have somebody that I'm not very happy with right now. And I'm sure a lot of you probably have some tenants that, you know, I think if somebody's really truly out of work, I mean, compassion says try to do what you can do. But in many cases, tenants are wealthier than the landlords. So it's a troubling thing. And I know a lot of you are dealing with that. I don't know where Leon and I were talking about that. I know that you guys have representation, Leanne said, and you guys are with some lobbying group and an attorney, and you're trying your best to wake the state up to it. But I think it's kind of a losing battle right now. I guess it's been extended, what, now to January? Is it that far? Yeah, it's extended to January.
Yeah, that's correct.
Yeah, it's beginning to create some severe hardships for people with mortgages. Some banks have some flexibility, but many don't. And certainly third-party lenders typically don't. So,
Chris, I got a question for you. Can you hear me?
yeah.
All right. In your opinion, when do you tell someone to start a subchapter S corp in regards to how much money they're making? I mean, do you figure in your mind, just in general, I mean, let's just say obviously, I don't know if there's a certain threshold you say, hey, you know what, maybe we should go from LLC to subchapter S or C
Sure.
corp, or whatever. How do you come up with that?
Okay, it doesn't really have to do with income. In my mind, it has to do with whether you have payroll or not. If you don't have payroll, you're way better, in terms of liability protection, attorneys will tell you it's the same. Now, some attorneys have biases, particularly a lot of older attorneys say, I would rather represent you in a lawsuit with a subchapter S versus an LLC, because it's been around longer and there's better history. Younger attorneys say, no, it makes no difference. They both have same liability protection. So then what happens, it gets thrown to the accountant. From an accountant's perspective, if you're subchapter S, then you as an owner need to be on payroll. Okay, you have to be on payroll. If not, you can be subject to penalties from the IRS if you're making money. So we don't normally go with the subchapter S unless we have unrelated employees. So if a client says to me, Chris, I'm going to hire a full-time maintenance manager to manage my properties. And they're going to start dealing with the subcontractors because I just can't handle it anymore. At that point, I would often say, let's convert your LLC to a subchapter S, because if we're going to run payroll, it's much better to have that, the liability protections and employer-employee law tends to be better with a subchapter S. So we're going to convert you to subchapter S, and then it's not a big deal to put you on payroll for a little bit of money. But if you don't have employees, I would never tell a client to convert to a subchapter S. It's more expensive to file and maintain the books and records. You have to have a double entry set of accounting. It would be much better to keep you on an LLC. And it also has some tax advantages I don't want to really talk about on a recorded Zoom meeting. But I'm more comfortable with an LLC and keeping your tax liability down for a couple of reasons. So I would say you would want to stay in LLC regardless of how much money you make, unless you begin payroll. If you begin payroll, that's when you want to start talking to your accountant about maybe going with a subchapter S. But it does increase your cost of operation. It definitely does. So it's not, you don't want to be doing that because you think it's going to save you money, because it's not necessarily going to save you money. Okay, and keep in mind, if you don't have employees, you get the same liability protection with both. So normally we would go with the LLC. Okay, and then, if the LLC is owned by one person, we call that a single member LLC. So it's what we call a disregarded entity. I don't know if you've ever heard that term. But a disregarded entity means it doesn't even have to file a separate tax return. It just becomes a schedule on your personal tax return. So there's virtually no cost to having a single member LLC on an annual basis, other than the $25 that our governor wants every year.
So like if you have a partnership, it doesn't, everything still applies the same.
Yeah.
So
Oh, yeah. But if you have an LLC and it's a partnership, and it's anything other than equal ownership of real estate, anything other than that, you would have to file a partnership return.
Okay.
But partnership returns are a little easier to file than corporate returns. So they don't have that dual accounting requirement that you would have to have.
I always thought you got better tax advantages on a subchapter.
Well, the one advantage would be is that the dividends you take out of a subchapter S are not subject to FICA and Medicare. And the LLC is. But there's things we do to kind of combat that. So, but it's worth a discussion. Okay. What else?
Thanks, Chris.
Do we have any attorneys in the house? I don't think we do. Steve's not on. My son's not on. Because you can't form them yourself now, pretty easily in New York State. I don't normally say that in front of attorneys, but LLCs now and corporations are getting much easier to do yourself. I can't do it because the Bar Association in Rochester considers it practicing law. Some accountants in some counties can do it, but not in Monroe County. But clients can do it themselves. In fact, I had a couple just this week in my office that formed an LLC, one formed an LLC, one formed a subchapter S. So they are a little bit easier. And I think, David, do you do yours? David?
We normally do, but Steve just did ours yesterday.
Okay.
For the apartment building.
It's
a couple $100.
How much was it?
Couple $100.
Yeah.
That's it?
Yeah.
Yeah. Now, wait, just to be fair, you still got to pay like $250 to New York State. You have to pay if it's an LLC, you got to publish. Do you know, David, what the publishing cost is now?
I can't remember what it is.
Oh.
Like
It's not cheap.
$175 or something. You got to do.
Is that what it is? You got
3 days.
2 publications for 6
Yeah.
weeks, I think.
Something
If
like
it's
that.
an
Yeah.
LLC. If you're a subchapter S, you don't have the publication requirements in New York State anymore.
Right.
I know people who've done their own, formed their own LLCs, and
Yeah.
never once have I heard that they did it right. So it makes me nervous to think about doing that myself.
Yeah, I normally, if a client's insisting on doing that, I usually ask who their attorney is and see if I can maybe negotiate to have the attorney do it. If not, then I call my son, who's an attorney, and I kind of beg him to give the client a break. If I fail there, then I usually tell the client, I can't really do it for you, but why don't you come in and sit in my conference room and do it? So if you have any questions, perhaps I could give you some assistance. And that's kind of how I do it. But I try to get them to do an attorney, and you know, if the attorney does it, if their fee is 200 over and above everything else that has to be paid, I think it's worth it. I think it's definitely worth the $200. You know, and like if you do it yourself, then we'll always get you the ID number. If it needs a sales tax registration, we'll do the sales tax registration for you. It's pretty easy stuff. So, okay.
And it's real easy on LegalZoom too.
Yeah,
They
that's
walk
what
you right through the process. We've done it both ways, but
you just got to be careful because LegalZoom, they do a good job, but they have, every time you go to a screen, it's like buying a car. They got extras they want you to buy.
Yeah.
And you got to just ignore all those extras. And that's when I help the clients, because the clients will say to me, Chris, do I need the red ball? I go, no, you don't need the red ball. What about the gold ball? No, you don't need the gold ball. You know, so it's like, that's kind of the assistance I give them, not legal assistance. You know,
Yeah.
do I need them to get the ID number? No, I'll get the ID number for you. It takes 2 seconds. So they, you know, they're trying to work it up, you know. So it helps if you've never done it, that and you get nervous. So you sort of want somebody there to say, you don't need those extras. You just don't need them. You just need the basic plan. And Dave, you've been through it enough. You know you don't need that stuff. But the last one I did, LegalZoom had something. They wanted to charge $9.95 a month for life. And all you had to do was hit a box and you're in for $9.95 a month. Something like to watch the credit of the LLC. I don't know what it was, just a money grab. So that's the only problem. Otherwise, LegalZoom is good. Listen, it's like anything else. They're trying to get extra money wherever they can in market. Oh. All right. I'm good then.
Well, I mean, I would just say to folks, this is one of the few opportunities you're going to get a chance to ask the CPA any question that you want to. So
yeah, don't be bashful. I'll take email questions. I don't lose them. Sometimes I don't get back that same day, but I'll get back to you. And if you don't hear from me, resend it. But, you know, right now, listen, I've never been the best at getting back on emails. I have to be honest with you. But I have an office manager, Karina. Those of you that know her, she really keeps me on task pretty good. And if you call her up and say, Chris hasn't gotten back on the email, she will come and sit in my chair and tell me she's staying there until I respond to the email. So she's pretty good about that. But I got to tell you, since this virus thing has occurred, I can't believe the number of emails I get. It's like a large part of my job right now is just going through emails every single day. I mean, you don't have to have a mask to talk on the phone, but I think a lot of people think they do, so they want to email instead. People who used to call are emailing, you know, but it's so I get a lot of emails, but I do try to get through them all.
Hello?
I hear a hello.
Yeah, I had a question about what are the the tax opportunities for properties located in the opportunity zones? Like what exactly is that?
Oh, okay. Are you looking at, who is this that's talking? You're just on the phone, right?
Yeah, my name is William Burke Mattis.
Oh, okay. I want you to email that question to me so I can send you literature. Because
Okay.
are you actually looking at property in a zone?
No, I have a property located in downtown Rochester that's actually inside of the zone itself.
Or that I need to
just wanna
get
know
you a lot
what
of information. So you want to definitely email me so I get you the information. Okay? It gets pretty complicated, but are you working with the city economic development?
No, no, not at all. I already put the property together. It's it's a mixed use. It's a commercial use on the bottom, and I got 4 condos upstairs. So
Okay.
I was wondering what's what are the opportunities and what are the benefits?
I'll get that to you. But you're not talking to anybody in the city of Rochester regarding it?
Not at all, sir. I'm trying to find out information of what's the opportunities for.
Okay,
So no,
I'm gonna give you, besides giving you information, I'm also gonna give you a contact with the City of Rochester Economic Development, because they like to be in on all those types of properties, because they got their own pot of money to help you. And
okay,
they have incentives that the city can do when you're in those zones. So I definitely need to get you in touch with the appropriate person in the city of Rochester. When you send me the email, also send me the address so I can see what zone it's in, and I can put you in touch with the right city of Rochester representative. Because the representatives are by the zone. Different zones have different representatives, but I'll get you in touch with the right person because they have some money available that they can use. So there's definitely incentives, better than not being in the zone. Tax incentives, New York State tax incentives that should really wipe out your personal income tax, New York State income tax for a number of years going forward. So if it works out right, but I'll get that to you, okay? But they're New York State incentives. So you got to be paying New York State income tax to get the benefits for the most part. But as I said, the city does have some money available to people on that. And I think, hasn't REIA done some seminars on that in the past? Did you guys ever
No,
do?
we haven't ever done a seminar specific to opportunity zones. I mean, it's something that just in passing we've talked about. So there've been a few people I know who have been interested, but it's been at most a handful of folks.
Okay, I'm going to email some documents on that. We have a couple clients that have done that. We've researched it. We have a lot of information. But the key is getting to the right contact with the city of Rochester. And I'll get that for you.
So Chris, can you send that to Susan as well?
Yeah, oh yeah. Oh yeah.
Because even though no one is saying anything, a week from now, 2 weeks from now, someone will come asking me about it because of
Yeah, I
this.
know for a while, Scott Spear's not on tonight, is he?
No, he's in this motorhome off
Yeah,
somewhere.
I know. But he had maybe a year ago, he had a lot of questions on it. I met with him a couple of times. We talked about it, went over it. And then I think he decided no. Well, as you know, because he's in his RV thing right now.
Right.
Okay. I wrote that down, so I'll get that.
Super.
And I'll try to get it out tomorrow on Friday. If not, maybe over the weekend, but I'll get it out pretty quickly.
Okay. Any other questions for Chris? Well, as usual, Chris, you've done your great job of bringing us up to date and providing us with information that I'm sure that everyone finds useful. And you are on our calendar, so assuming that we're all around and kicking, we want you to put us on your calendar for this same second Thursday in October next year.
Oh, you can count on that. I won't do what I did to you that one year.
Okay,
But my wife knows now she can't do any travel arrangements in October till I get the date from you. So that won't ever happen again.
we definitely appreciate it, and we appreciate all your support.
Thank you. Thank you. And I
So,
hope to see you all live. So now,
yes,
one thing, you mentioned the Christmas party being limited to 50 people. Now, I think if you have a bigger hall, you can have a bigger group. So one of the possibilities is I have a couple clients that might be interested in hosting it. One of them being Hero East downtown, because he's got an occupancy level of like 450 people. So I think he's got approval to have like 120 people. State
Okay.
approval. So I think if if the room is big enough, you can have a larger group. I don't
yes,
quite know how
that's
all
my
that
understanding
works.
as well. That's my understanding as well. So,
Yeah. And dates are available because there's been so many cancellations. So even though it's in December, normally in December, you can't, even think of calling a place in October. This year, I think you can call any place you want, including like the country clubs, like Locust Hill Country Club has seating for like 800 people when they open all their doors. So they can easily, the size of this group is what, about 100, wasn't it last year?
yeah, I mean, typically it's 120. I think maybe one year might have been 140, but I don't expect that the numbers will be that high, because regardless of the amount of space you have, there are going to be people who are going to have some concerns about
Yeah.
being in a setting of that sort.
Well, my concern is you tried to get me to go to it for 10 years and I never went to last year. I went last year and I had a blast. It was probably the best Christmas party I went to. So now, like, I'm bummed it's going to go away. I finally go and now you're not going to do it. So I'm hoping we can have it.
Yep, so are we. So yeah, if you can get that, if you can touch base with a couple of people, we will be certainly happy.
I'm going to find out. I'm going to talk to Ted Run at Hero East. Just get an idea from him on, because being there last year, I know roughly what you want. It's a fairly simple buffet. We have to spread out big time. You need a big room, but his if you've been in the Hero East, it's a big ballroom.
Mhm.
And 100 people would be lost in there, but that's kind of what you need to do today, is to be lost in the room. So, and then they have an outside area too, a nice outside area. So with heaters. So I'm going to check into it.
Okay,
I'll let you know, Leon. Okay. All right. Thank you.
Thank you. So I don't have anything else that I wanted to cover this evening, but I'm going to one of the things I should cover is to make sure that people recognize that we do have other meetings coming up this month. Okay, next Thursday, we have the Thursday evening, we have the alternative meeting. Mr. Joe Lababera is going to be the person who's going to be the subgroup leader running that session. And Joe, you normally have Scott helping you do that. So Scott Spear. So we don't know whether he will be around there or not. So, but you'll have to be command of the ship by yourself in this case.
Oh, we'll see what happens. We'll see if he's on or not. We'll
Yep.
figure it out.
Yep. And then the fourth Thursday, we'll have a landlord support meeting, and that meeting is going to be in the evening. And Carl Weeks was on earlier, and Carl is the person. Oh, there he is. Carl is the person that leads that session, and he does his normal great job. No matter when you come and listen to it, you're going to get facts and information that you can use. So those are the couple of things that I want to cover. Joe, Susan, Andy, anything you want to add to what I just said?
No. No.
Okay, so I'll add one thing, and that is thank you for being here. And we look forward to seeing you at the next session. So have a great evening.
Thanks.
Thank you.
Thank you.
Thank you.